The dollar versus Swiss franc moved sharply higher yesterday off of the same news about the tariffs in the U.S. over the weekend. That took the price up toward the high price that we saw in January, but willing sellers leaned against that level and forced the price back to the downside. There has been some tactical breaks in trading here today that has pushed the price further to the downside, and I'll talk about this in this video, so let's get started. I recall from Friday, the price closed right within this area right through here. Was a key swing area where the price had found either support or resistance over a recent time period. In particular, this ceiling right through here. The price gapped to the upside off on Monday, early Monday, and continued that run to the upside with the high price reaching 0.91965, just short of the 0.9200 level, which happened to be the high price that we saw in January. So as willing sellers leaned against that level, forced the price to the downside. And as the day went on, we got reprieves in Mexico and then Canada, which helped to further weaken the U.S. dollar. And the price moving back toward this swing area right here. We actually broke below it briefly here before rotating to the upside and then selling off into the Asian session. However, the low price that we saw in the early Asian session did find support buyers against the 100-hour moving average. That's a blue line in this chart. We did so here as well. And the ability to stay above that level pushed the price back to the upside, trying to stay above this swing area once again. But then the price failed below that level and started to move below the 100-hour moving average. And now we see further selling to the downside in this pair. That move to the downside is now taking the price below the 50% of this move to the upside, which comes in at 0.90881, and also the 200-hour moving average. That's the green line in this chart, 0.90764. This area is now going to be really close resistance for traders today. Traders who initially found support against that level will now use that level as resistance, and we'll see if the level can stay below that level. If it does, then we could expect further downside momentum to toward the 61.8% retracement, and maybe even break below that level to head even further to the downside, perhaps down toward the 0.90209 level. Alternatively, if the price starts to move back above this level, and it's not that far away, so I can't discount that, we could have a failed break here. Then we could see disappointment on the failed break and then rotation back toward the 100-hour moving average, where traders will do it again and try to figure out whether this level is resistance now after being support earlier in the day. So that's my look at the dollar versus Swiss franc. Sellers are trying to take control, more control, and we'll see if they can keep that momentum going. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.